Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, June 8th, 2018. I was looking at the charts today, looking at the various sectors within the S&P 500, and wanted to check out a few that were standing out today. XLP is one of those, up a nice gain today, 1.16% on pretty much a flat market. Now, what I did here is I did a deep dive into XLP. I haven't done that in a while. That means I went through every one of the components. There's, at least according to my charting platform, showing me there's 34 stocks within XLP. And what I did is I flagged any that stood out as actionable trade ideas. And believe it or not, 25 out of the 34. I tried to streamline this video as much as possible, but 25 out of 34 stand out to me with pretty clear chart patterns. So there's just, as I went through the charts, I just came across what I think is a treasure trove of trade ideas. So a lot of T's in there. Didn't mean to rhyme it like that, but there are just a ton of setups. So the takeaway from this is twofold. Number one, if you're looking for trade ideas, in fact, there's both longs and shorts. There's more long setups in here than short setups right now. I'll go over those charts. And the other takeaway from this, there's just these charts on these stocks within the XLP, the consumer staples sector, is just a great example of technical analysis. So if you're new to trading, new to charting, as I go through these charts, I'm only going to look at two time frames on each stock, daily and weekly, and show you some of the developments. The weekly chart paints the bigger picture, longer term, if you're a longer term investor or trend trader, and the daily charts do two things. They're more of a go-to time frame for swing traders with holding periods of just a few weeks to a few months, but it's also where you want to time your entries and exits if you're a longer term trader. Weekly charts might tell you a stock looks poised to rally or for a trend reversal or correction. However, you want to try to hone down your entries and exits with the daily chart and maybe even the 60-minute chart. So with that being said, I'll try to go through these as fast as possible, keep the video as short as possible. But remember, you can always click on the lower right-hand corner of the video. There's a little settings icon and increase the speed up to 1.25 or 1.5%. Or if you're pretty quick taking this stuff in, you can go to 2 times speed. You can always reduce that back down or pause the video. So let's go ahead and dive into the charts. Start with, of course, the sector itself, XLP, roughly an 8% weighting in the S&P 500, so it's fairly significant. And again, pretty good move today. What stands out to me at the time I wrote potential positive divergence, that's been confirmed. We made a slightly lower low in the PPO, but it was almost an equal low. So again, I say this often, for all intents and purposes, that's bullish divergence, because you see prices made a much lower low from that point right here, from this last line. Let me move this one away, down here to down here. So we had a significant lower low in prices with a roughly equal low in the PPO, and we had a higher low in the RSI, which is positive divergence. So there's that. I probably should add a trend line here off the highs. That would make sense. And so basically what we have today, you can see, is a breakout. Impulsive. This was former support. I haven't updated this chart. I just gave you that trend line, and now I should change this. Support, once broken, becomes resistance. So I had added this line here before. We broke below that support. Look how many tags against that level we've had. It's insane. I mean, this is day after day, week after week, over a month of test on that level. One false breakout failed there, but XLP didn't give up, and boom, impulsive breakout today. So that is bullish. And yeah, it makes me, looking at a lot of these charts, at least this sector, makes me second guess, how much more life is in this market. I'm still looking for a near-term pullback in the broad market, especially tech. Tech, and you can see this sector. There's a lot of sector rotation. If there's anything this market's been plagued with in recent years, or mostly in 2018, it is sector rotation, and that is how you're going to successfully navigate this market. Be it a bull, be it a bear, be it a sideways market, you want to be long the most bullish sectors, short the most bearish sectors. And then within that, and I'm going to go into this in a second here, within a sector, you want to be long the most bearish stocks and short the most bearish stocks. There are sectors, for example, gold mining stocks, GDX. They all move together, because if you're a gold mining company, gold, silver, your business model is identical to your peers for the most part. They're pulling metals out of the ground, by far their largest impact on their earnings is the price of precious metals, of gold. Gold goes up, their bottom line goes up. Gold goes down, their bottom line goes down. And if you don't believe me, just overlay a chart, GDX or the Huey index, go back 10, 20 years as long as you want. You will see a very clear, unmistakable positive correlation between gold and gold mining stocks. However, and the point to that is too is when gold, if GDX rallies in a 50% bull market, you can be all but assured almost all, if not all, of the stocks within GDX will have gained, double digits. That's not the case with XLP so much because you have a lot of variation in business models. As I go through these components, you'll see these companies are not making the same products. So keep that in mind, and that's why I'm going to go over which charts look bearish and which charts look bullish. And then the final takeaway from that is if you want to keep things simple, you invest in XLP if the majority of charts look bullish, and you'll do well. But if XLP goes up, say 10%, I can almost assure you if you go and pick out the most bullish charts within XLP and avoid the most bearish. So in other words, build your own little fund, if you will, of maybe a dozen or so names in this sector or components of this ETF, you will outperform and possibly vastly outperform what XLP does. All right, so daily chart I just showed you. I digress for a bit, but I think those are all important points to note. And what I'm looking at here on a weekly chart, now this paints a bigger picture, and keep this in mind as I'm going over a lot of these charts. I'm going to show you more bullish setups and bearish setups. But the important thing to remember, if this market has topped in the S&P and all but what was it? I went over it yesterday. 9 out of the 11 sectors are still off their highs. Only 2 sectors are at or recently made all-time highs. Technology and one other one I just covered yesterday. I think it was discretionary, consumer discretionary, if I'm not mistaken. So point being, here's a primary uptrend line. I have actually 2 trend lines, but we're below trend. We had powerful weekly negative divergences on the weekly chart, and so I think we might be in store for a bear market rally. But if this is the top, if the consumer staples and a lot of other sectors have embarked on a new bear market, and you're only going to know about that for sure once we're down 20% or more, at least in the broad market. XLP has already dropped, let's see, from the highs here, about in the ballpark, about 17%, so almost hit that bear market threshold. So what I'm trying to get at is keep in mind, if this is a new bear market, we're maybe going to get, or maybe not, a kickback rally that falls shy of the highs, and then one more move down, which I think we probably do come down here. I feel confident on that. Within 2018 or 2019, we move lower, and I do think that the staples have topped. But again, bear market rallies can be very powerful. They can last for several weeks and sometimes months. So that's what I'm looking at here. But again, back to my point, if we're in a bear market, then things have changed. What will happen is bullish chart patterns will tend to either not play out, or if they start to play out for a reversal, they'll fall well shy of their measured targets and what you might expect from that same type of bullish pattern during a bull market. So keep that in mind. The other trait to be aware of is during bull markets, overbought becomes more overbought like it did here. So when you hit that typical 70 oversold or overbought level, it's not unusual to see overbought become a lot more overbought, meaning the RSI goes much above, quite a bit above 70, or stay overbought for an extended period of time. That's not unusual during a bear market. And the flip thing happens in I should say that was not unusual in a bull market. So the flip thing happens in bear markets. Now keep in mind, we're looking at a 10-year chart. So throughout this whole time, we've been in a bull market. And in bull markets, again, oversold is very rare and it's fleeting. Usually you touch that oversold level. What I've done here on XLP is I've modified the oversold line. Traditional TA says anything 30 or lower on the RSI is oversold. But I don't, I'll throw that out the window. If I look at a chart and I look at an entire bull market, I didn't see a single tag of the 30 level. We've never hit oversold. So therefore, I placed a line which to me is oversold on XLP, and that's about 34, just under 35. You can see 34.84. So again, during the bull, this was bear market right here. That was a bear market low when we did the last time we hit it. So that doesn't count. That was not a bull market reading. That was the end of the bear market. So you can see here all these tags of this green line, and that's where we're at. However, you can see that we kissed it here we had a little pop and we kissed it again. So it may be a bit early to say, but this is a little bit of a change of character because, again, as we go back in time, we look at all these other tags. We kissed that 35 level and never looked back. Those were great buying opportunities. The white arrows show you each and every time without fail. That's where you wanted to go long. And I tried it here. I think I had XLP as a long trade idea. I can't remember if we were stopped out or got a quick pop out of it on the last oversold reading. But here we are already oversold again. So again, change of character. And just keep that in mind. So where it comes into play is if these bullish chart patterns I point out don't play out, that's most likely because in a couple months from now we'll see that the majority of indexes, its sectors I should say, and the broad markets have moved lower. But until then, the overall trend on the broad market is still bullish. So let's go through these charts without any further ado. I'll go through these in order. I've sorted them. They're all the flagged names in the list, but 25 again. And I'll go through an order of market cap or whatever it's worth. So we'll start here with Walmart, their largest in the sector, at least in the ETF. Here's what I see on Walmart. I see support here around 81.65. I have pointed out, I believe in the past, I pointed out support there was about 85.16, and we hit it. We hit it for 1, 2, 3, 4, 5, 6, 7 weeks, and then boom. Such is technical analysis. So often, once you break support, you don't just limp through it. It's impulsive. We had a candle that went all the way down to that next support level, and you can see that we've been testing it since. So what's the takeaway from that? Well, if you're bullish, I can see the PPO starting to curl up here. So the RSI is turning up, so the momentum is turned up. This is your most objective buying op as a pullback to the 81.65 level. However, 85.16 now is resistance. So a break and especially a weekly close, because this is a weekly chart, weekly close up above that level would be bullish and may indicate that Walmart wants to go in and maybe make a run to backtest this trend line from below. That'd be a pretty decent move if so. So there's Walmart. If that level goes 81.65, the support level down here goes, we'll probably come in and visit this trend line, and I have a pretty high degree of confidence we'll see that sometime in 2018 or 2019, this other trend line down here. I'll jump over to the daily chart, and this is what I'll be doing with each stock, jumping back and forth between weekly and daily. This looks pretty good. There are a couple things that stand out. We have positive divergence, which is going to be one of the main themes in this video, as in most of the trade ideas that I do. I look for divergent highs like we had and divergent lows. We had a divergent high right here. Correction, mostly in price, more so in time right here. We had a divergent high right here as it's marked. Big correction. Even took out this trend line here, and we're below that trend line now. That's on the daily chart. Trend line goes back to January 2017. So there it is. The case can be made because we have confirmed bullish divergence with a recent bullish cross on the PPO, putting in a higher low on the PPO and the RSI. However, you can see this circle here. I'm a little suspect about it right now because I like to use this 9 EMA, the signal line on the PPO, as a trend indicator. If you followed me for a while, you know that's one of my favorite trend indicators, and it's pretty simple and effective. Works better on some stocks than others, but on balance, it works pretty good. Again, it's the white line I'm looking at, not the blue line. And when it's above zero, the trend is bullish. And when it's below zero, the trend is bearish. So keep that in mind right now. We have a bearish trend. The last time we had a bearish trend was this period here. And you can see the stock was in a downtrend. So that's why you have to take some of these, bullish setups with a grain of salt. And there's nothing wrong if you're looking for long trade ideas to take any of these long. Just put a stop in place, and you're either going to be right or wrong. And if you're wrong, your stop should be, a third or less of what your profit target is as far as, in percentage terms. And that's what trading's all about. So you can afford to be wrong on a few, and you only have to get, well under 50% of your trades right as long as you're using a good risk to reward ratio. PG, Procter & Gamble. All right, this is a daily chart. Trend line breakout, impulsive breakout today, up 1.8%. You can see a big impulsive green candle following a divergent low. So this one looks good up to at least that 75.15 level. That would be a gap fill of this big gap right here, a backfill. I think I said gap fill. I'm trying to talk fast, guys, to get this video out. I know there's so many stocks I want to cover, and I do not want this to be a half-hour video. Breakout, first target, and then maybe some other targets. And again, if you're interested in any of these on the site, I can try to zero in and give price targets. Weekly chart, I see a bullish PPO crossover pending right now. That's a pretty good buy signal, especially a low level, what I call low level. The PPO is way down here. It hasn't been this low since the bear market back here. We're also coming off oversold levels. Like I said earlier, this is a persistent oversold level, so it's a change of character. We haven't seen that this entire bull market. In fact, the only other time we were oversold was right here. The only other time we hit that 30 level since the last bear market. We had a divergent high right here. Boom, big drop. So this is a common theme. You're going to see a lot of divergences, both bullish and bearish, marked on these charts. And when you look at the weekly time frame, these are your trend trades. These are where you can position and hold for months. That was almost a 32% drop following this divergent high right here. We just had a divergent high here recently, and the stock fell about 24%. So the question is this a bear market rally with more downside to come? Possibly. Also note here that some of these signals and some of the divergences, for that matter, don't always play out. Here was a bullish PPO crossover right here in this. So in other words, this is a good example right here. Is this right here, this kickback rally with this potential bullish crossover, is it this, what we had right here, the first counter trend rally within a larger correction? And that's yet to be seen. So like I said, I'm giving you conflicting evidence. I don't know the answer. But when we go through these charts, I think you'll get a good feel how the sector looks. And again, you can take a position, and as long as you have a stop in place to limit your downside if there is another thrust down, and we'll just keep this one on our radar. If you guys know anything about me, I'll be stopped out in a trade sometimes 2 or 3 times, but I'll stay on it. If the charts are constructive, I will follow up on that trade and look for another entry. So this is a very possible scenario, whether there's a little more upside here or not. I think that PG comes down to the 67.11 area in the coming year or so. Very, very well defined level too. A lot of reactions from below back here, and reactions from above as well right here. So that is where I'd be very interested, especially if it looks something like this. We come up and make have a little rally, then pull down to that level here. I'm trying to draw it out with the blue lines, then reverse and have bullish divergence. I would much prefer to see positive divergence with that stock at weekly support to go long than I would here based on this. Okay, a lot of talking on PG, and there's so many to go through. KO, Coca-Cola. We had a series of divergent highs here. So this is a couple of takeaways from this is, number one, sometimes I hear people say, well, the divergences don't play out. They do play out. These were sizable corrections, probably double digits each one. And so there's divergent high number 1, divergent high number 2, 3. And these were really an extension of the same negative divergences down below. The stock rallied from there, put in another divergent high right here recently, and has broken below trendline support. Now, that's the bearish case. Is there more downside? Maybe. We have a potential bullish crossover right there, I noted. Let's look at the daily chart on KO. And you can see we had also bullish divergence on the daily chart, just as we had negative divergence right here at this point. I should have had the line right there. That's where the divergent high was. So far, this divergence has played out. I wouldn't chase this one here. Yes, we had a divergent low. Would have been nice to catch down at the bottom, but we didn't. So I'm going to move on from that one. Not one of my favorite right now. Not enough meat left on the bone, in my opinion. PEP, PepsiCo, positive divergence on the RSI. See, here's another case where, you can make a bullish case or a bearish case. This trend indicator is bearish right now. And you can see it was bearish at this point. It was bearish at this point, and every other point on there, that white line with maybe a little whipsaw signal here was above the 0 line, telling you to be long the stock. And right now it's telling you be careful. We're still this may be a little false, bear market rally, counter trend rally. So that's PepsiCo daily. Did I cover? No, I didn't cover the weekly. This is the bigger picture. Again, this is why I like to look at the weekly charts. It helps put the bigger picture in perspective. These weekly charts go back to the 2009 lows. This is a very well-defined primary bull market uptrend line. This is a clear breakdown, back test, and then an impulsive move down. This tells me this stock has ended its bull market. It's down, let's see, off the highs so far. 20, yeah. So technically that's a bear market there. It's dropped about 22%. Is it over? Maybe, maybe not. Here's a pending bullish PPO crossover. But if you ask me what will happen, at best, my most optimistic scenario, and it's still a tradable scenario, would be a back test to that trend line. That's a pretty good move, followed by another thrust down. So if we got that, it would look something like this. Give us those bullish divergences, and maybe we'd have a nice buying up from Pepsi. You can buy it here, maybe ride it up a little bit, and then if we get a divergent low sometime later 2018, 2019, we can look to go long again, and we can also look to short it up here as well if the charts indicate at the time. PM. I'm going to go a little quicker here to get through all these names. I really wanted to cover them all because there's so many charts that stand out. At support, long-term support here. This is the weekly chart. You can see well-defined support. I've marked these arrows every time this stock has been oversold. You can just follow the crosshairs up and look what happened. It rallied from there. We were oversold here, or near oversold. That oversold line should be just a bit above. I should adjust it to about 33 or so, 32 even. So oversold, boom, nice rally. Oversold here. There was a little rally, nothing big. And again, this is a change of character. We were oversold there, at least to the levels we were before, and we didn't get much of a rally. Now we're even we're at the most oversold level this stock has been in since the last bear market, and indicators are still pointing lower. So daily chart, we have bullish divergence. They're not confirmed. We need to see this. They're not clean. It could rally from here, but I'm a little skeptical of that one. MO, I like a little better. I've mentioned this one in the trading room recently. I said there was a level at 56.70 resistance we had to take out, and we did. We busted out of it today, and there's an impulsive move. That follows this divergent low right here. You can see the bullish divergence here on the daily chart. Just as we had a divergent high back here, that divergent high so far led to a correction of about 30%. So the theme here too, keep in mind, a lot of these stocks, as I'm highlighting here, are in bear markets. There's say what you want about the broad markets. Technology, largely technology and consumer discretionary have kept this market up to new highs, whereas there are a lot of other individual stocks and some sectors that are in their own bear markets. And here's Altria on a weekly time frame. There's a very well-defined bull market, primary uptrend line. It terminated here. The highs, all-time highs in that stock, where it was a divergent high, and so far MO has fallen about 25%. So clearly in a bear market. Say what you will about it, but you can't argue that math. That's that's by definition a bear market. And like I said, more importantly, we're below trend. I won't, I'll look at a tech stock, semiconductor, it might fall 30, 40% off the highs, but I don't consider that a bear market really. If it's above trend in the stock, it was just up 300, 400%. But in this case, this is a steady Eddie dividend paying stock. And there it is. So potential positive divergence on the RSI, no divergence on the PPO, but we do have a pending crossover. So again, maybe a little kickback rally here in the sector. We're certainly seeing some moves today, but be quite bearish to see all of these bullish setups that I'm talking about today fail within the next few weeks, just as it looks like they start to get going. That is a characteristic of a bear market, is that bullish breakouts, just as they start to look good and get going, fail the same way that bearish breakdowns fail during a strong bull trend. Keep that in mind. All right, so here's Costco, rising wedge. This is one of the few bearish ones I've looked at. This divergence is not confirmed, but you can see it here on the weekly chart, negative divergence right there. There's a trend line to watch. You don't have any type of sell signal yet, but if Costco breaks below that trend line, I might have had it like this on the weekly chart, something like this. Just keep an eye on that one. We also have divergence on the daily chart. So here's one I would not be chasing. If I were to build a portfolio, a long short portfolio of XLP components, this one would be in the short side. Not yet though. You don't want to short a stock without any type of sell signal whatsoever. You'd probably want to wait till it breaks trend, especially with the sector right now catching a bid. Next one up, KHC. This one's ready to go. Here's a setup for you. I like it. It looks like like an inverse head and shoulders pattern here with a left shoulder, a head, a right shoulder, and a neckline. Inverse head and shoulders are bottoming patterns, so what you need is an impulsive break above that neckline, and that would measure up here. The measured target is the distance from the head to the neckline. You can see a couple levels. I have to clean these levels up. Don't go off that right now. In fact, ignore both of those levels, I'd have to update that chart for you. But there's one to watch, and it's also a potential long-term support. Here's a reaction high. It's not the best defined support level, but that's early 2015. You can see that reaction high right there, and we already kissed that level once with a big doji candlestick right there and bounced off it. PPO appears to be curling up. We're coming off deeply oversold levels, but again, it's a little concerning because this looks more like bear market stuff now. We haven't seen anything like that. Here's bull market stuff, extended overbought levels, and we're not seeing that anymore. So food for thought, guys. All right, next up, try to keep this moving. CVS. CVS is interesting. This one, let me reference a post on the site from back a while ago. Back on, where's the date? October 4th, 2016. So a while back, I said, posted pharmacy benefit managers, those are called PBMs, nickname, poised for a new bear market. And I showed you the charts of a few, including CVS. This was a 3-day period chart. So we had broken this trend line here, made a near back test, and I gave you a potential target down here right around $60. So I said, CVS looks like it put in a major top, and that was again back in 2016. Let's fast forward to today and go back to CVS, and there's that target, potential not confirmed. So we've fallen. This is zoomed in. I had a 3-day period chart there. I'll have to show. There it is. Okay, so we were somewhere here, and look how it's played out. This is technical analysis. I plan to start incorporating more of these long-term trade setups. In the past, I used to have a lot more trend trades, long-term trades in years past. 2018 has been a sideways grind. The S&P is still well below its highs. Only tech stocks, for the most part, are making new highs. But even then, they're not too far above their where they started the year. So I've been averse to putting a lot of long-term trade ideas, but may look to start adding some of those back. And this one would have been a good example. I mean, we could have shorted then and tucked it away, held on to it, and now we've hit that target. So what's my point? Well, twofold. Final targets are usually where I think the trend will end and there'll be a reversal. And this chart confirms that now. We have bullish divergence here on the PPO and the RSI as we fall into that support level. Let me jump back to go to a daily chart. We need to take out this level, 66.60. You can see it's a resistance level. There were a lot of reactions there, and these were targets on a recent trade. Weekly chart, there's that bullish divergence as well in the weekly time frame. I need to add that other divergence line, then we'll move on to the next one. So there it is, just like we had. I don't know why I didn't have it marked already. Negative divergence at the highs, and this is again the common takeaway. If you don't plan to trade any of these, and you're new to charting or technical analysis, you can just look how well these trend line breaks work to signal, get out, get short. If you're long, get out or short the stock. And these divergent highs as well. They do play out just as these divergent lows play out. Sometimes they take time. And you have to give yourself a little room on the stock. So what you want to do is maybe wait, start with a small position, add on, wait for those strategic entries like I talked about, break of support or some type of bullish candlestick reversal. And then you can always add to your position. That's one way to do it without, if you take a full size position, especially if you're trading off the weekly chart, and this stock takes, goes down another 10%, you'll probably be stopped out. But if you have a very small position, you can hold on. And then when the charts start to firm up, you can add to that position. WBA, Walgreens Boots Alliance, so close competitor of CVS. Again, divergent high correction, divergent low rally, divergent high correction, impulsive too. The breakdown, again, this chart just speaks volume to me. These stocks trade so well off the technicals. Some of these stocks, there was a breakdown and a back test. Sometimes you break down and you get a meltdown. Somebody asked me that the other day in the trading room. Randy, do you wait to for a back test of a wedge or a trend line before you go long or short a stock, or do you do it on the breakout? Well, it all depends. There's a lot of factors involved. You have to look at the 60-minute charts, the daily charts. In this case, it was a one and done. This case, you had a little minor back test and then you melted down. But right here, you can see we broke down, and a couple months later, we back tested that trend line from above, and at the time put in negative divergence, and you had a correction in both time and in price from there to there. You can see from that point, oh my gosh, trying to grab an arrow tool. Screen software doesn't work too well when you click on that. There it is. And now we have this downtrend line. We have positive divergence, so watch for a little breakout there in WBA. Daily chart here, falling wedge, positive divergence. And we're at the 29-minute mark, and I have so many more stocks to go, guys, that I'm going to wrap it up here. And at least you know what this video is about. There's some even better looking setups that I have, but to keep this one under the 30-minute mark, we'll stop it here. And that way, if you're interested, you'll know what the second one's about. I won't spend so much time talking about considerations like bull versus bear market, oversold. I'll just go through the charts and show you which setups stand out to me as bullish or bearish, and give you, any that jump out with price targets or objective entries. I'll point those levels out. All right, this has been Randy Finney with the right side of the chart. Hope you enjoy.